Since it was launched as a public company in the mid-1980s, 1984, as the chairman referred to and Mr. Waye went on the board, Power Financial has been focused upon creating shareholder value. Like our major shareholder, Power Corporation of Canada, which this year marks the 50th year under the leadership of the Desmarais family, our focus has always been on creating shareholder value over the long term. Over time, we have gone through different phases. A period of laying foundations in the late 1980s and the early 1990s. During those years, Montreal Trustco was sold. Great-West Life went through a period of refocusing. That was followed by a period of rapid acquisition-led growth from the mid-1990s to 2008. Then came the financial crisis and its aftermath. We were rock solid through the crisis, but nonetheless spent the next several years ensuring that we had the necessary capital, liquidity, and risk management systems to meet regulators' expectations. And once again, we find ourselves in a different time and one that calls for different strategies. While circumstances have been different in each period, what has been consistent throughout the period was our approach of making decisions based on what's in the best long-term interests of the company and our shareholders. Since Power Financial's inception, it has created value through a focus on managing to the same basic principles. Take a long-term perspective and investment horizon. Build industry leaders with attractive growth profiles. Provide active and strong governance oversight of our companies. And use prudence, be risk-aware, and maintain a strong financial position. So where are we today? Well, it's been evident for a number of years now that changes in technology, consumer expectations, and regulatory focus are changing business models in financial services. Success will be reserved for those organizations that can provide clients with best-of-breed products and services and advice delivered to them by the means and at the times that best suits them, with full transparency regarding price and risk. Several years ago, the different businesses that make up Great-West Lifeco and IGM Financial embarked upon transformation strategies, which involved augmenting their talent pools, their technology platforms, their product and service offerings, while also reducing prices in many instances. One of the consequences of such strategies was an increase in the rate of growth of expenses to levels well above the historic levels achieved by our companies. And all this was going on, these difficult choices were made with a lot of external headwinds going on. First of all, the negative impact of record low interest rates, which hurts particularly the profitability of insurance products, declining fee levels on mutual funds, a marked shift in the flows of funds towards passive products versus the active funds that our companies manage, and higher levels of capital and oversight costs. So the resulting impact has been a reduction in the rate of growth in profitability of our companies over the past several years. We are as convinced today as we were a few years back as to the wisdom of the strategies we are pursuing. They are consistent with our historic and ongoing objective of creating superior shareholder value for our shareholders over the long term. The strategies we are pursuing to create value in our financial services businesses can be grouped around 6 major themes. Transform our advisor-based distribution businesses. This is particularly relevant in Canada. Harness the full potential of our group customers, where we have significant businesses in every market in which we operate. Reshape our global asset management. Increase the competitiveness and the profitability of our core insurance businesses. Deploy and redeploy our group capital. And develop a portfolio of positions and options in the high-growth fintech space. The 5th point, deploy and redeploy capital, is code for making increased use of merger and acquisition activity. Our group has a long and successful history of using M&A to create value. While the last several years were marked by a necessary focus on internal business transformation, we have nonetheless remained active in M&A. And we anticipate putting even greater emphasis on M&A to reshape the portfolio of businesses that we have so that we can deliver faster growth and higher returns. What's more, we have the financial resources to do so. One thing about M&A, however, is you never control the timing. Opportunities come when opportunities come. In 2017, a number of our businesses reached inflection points following several years of investment and change. They enjoyed marked improvements in client experience, they gained market share, and they achieved improving financial metrics. I'm looking forward to sharing some of those with you. While the pace of transformation of our business models is ongoing, and in fact it's accelerating, we've also entered a new phase where the rate of growth of our expenses is coming down, and we expect this to continue in the periods ahead. Together with the opportunities for value creation that are coming from our repositioning of the Pargesa portfolio of companies, we are entering the next few years with a very clear game plan as to where we're going, and we have the resources needed to execute it.